Welcome to Financial Literacy TV. Today we are reviewing the Cryptocurrency Investing Bible. An Introduction to Cryptocurrencies and the Technology That Powers Them by Alan T. Norman. We are going to look at Chapter 10. How to Earn Cryptocurrency. Before you're ready to burst into the cryptocurrency world, there is one more thing you need to know: how to earn cryptocurrency. There are several ways to earn income in the cryptocurrency market. First, you should carefully familiarize yourself with them and choose the one that suits you, depending on your lifestyle, financial standing, preferences, etc. You can even choose several coins and combine them skillfully. In such a case, you will have a better opportunity to diversify risks and earn more. Nowadays, there are the following ways to gain profit in the cryptocurrency market. Number 1. Long-term investment. Number 2. Trading. Number 3. Mining. Number 4. Participating in initial coin offering. Number 5. Reselling cryptocurrency. Here is a brief overview of each of these methods. Then I will give you a more in-depth look at each strategy. Long-term investment. If you choose this way of making a profit, then you should have a period of 1 to 2 years. Invest a sum of money you can easily freeze for several years. A substantial amount of money, if you can invest in parts only. This too can be viewed as a long-term investment. Readiness for risks, which are higher than in the banking sector. You make money through significant capital gains in the long term. Trading. If you prefer this way of making a profit, you should have time, not the time for waiting, as with long-term investment, but free time you can devote daily to trading. A small amount of money. Perseverance and diligence. Mechanical intelligence, as you have to work with numbers and charts. Possibility to stay tuned and monitor developments. You make money by beating the market and taking risks. The higher the potential gain, the higher the risk, in order to potentially make money quickly and gain recurrent income. Mining. Mining is the process of producing new cryptocurrency or bitcoins. If you are interested in this type of making profits with cryptocurrency, you should decide whether you'd like to be a hobbyist or dive into professional mining. For hobbyist mining, you need to have mechanical intelligence or a friend advisor with mechanical intelligence. Startup capital, usually up to 6 mining farms. Readiness for technical problems and interruptions. Protection of equipment from external factors, pets, children, etc. You make money through a small but constant profit in mining. You also enjoy the opportunity to not only to trade in the market, but to manage it. ICOs, initial coin offering. To date, a lot of people participate in so-called ICOs, initial coin offering. Roughly speaking, this is another interpretation of a crowdfunding model, similar to an initial public offering. The participants finance the development of a project in return for future benefits, but without any guarantees. Initial coin offering is the issuance of coupons or tokens by a certain project to be used to pay for site services with cryptocurrency in the future. Initial coin offering has a lot in common with a venture fund, an investment fund focused on working with innovative enterprises and project startups. A venture fund invests in securities or shares of enterprises with relatively high risk and expects extremely high profits. As a rule, 70% to 80% of such projects do not bring returns. However, the profit from the remaining 20% to 30% makes up for all losses. If you think you are brave enough to sponsor a project without guarantees, first ask yourself, am I ready for extra risks? Do I have a capital cushion for diversification? You make money with initial coin offering by taking big risks with the chance to make super profits. Reselling cryptocurrency. Reselling cryptocurrency has a lot of resemblance to trading. Here you also make money on currency fluctuations, but unlike trading, it's about the game between the wholesale and the retail price, rather than the market or exchange price. If you are interested in this way of making a profit, then you do not take risks. Operate in small sums only. Understand that income depends on your turnover. So far, we have a superficial knowledge of the basic ways of earning income in the cryptocurrency market. Now let's dive deeper into each method. Making long-term investments, a more in-depth look. You may recall the first principle of Warren Buffett: never lose money. It is especially true for long-term investment, as the most important thing here is to keep the money, not to lose it. Let's outline the main principles of making a long-term investment. Do not lose money. Reduce risks. Do not make a fuss. Reap benefit in future. This is how your cryptocurrency portfolio should look like for making long-term investment. The blue color is used to indicate more moderate and stable positions, which can be less profitable. The green color shows more risky yet more promising positions. Blue coins are the currently more stable currency. Why do we mark this currency blue? We do so because there is a strong possibility this currency will grow in value. Bitcoin takes a leading position here as it is still considered to be the most reliable currency. Besides, its price will only grow. Why am I so confident? Here is my answer. The entire cryptocurrency turnover is now carried out through Bitcoin. This currency is accepted everywhere. Swift development of the project and the system as a whole. The dollar is also marked in blue because you should always have quick money in your portfolio with which you can operate quickly and exchange for cryptocurrency. Now let's look at the green coins in the portfolio. If the previous currency can be viewed as almost unwaveringly stable, then the situation with green coins is constantly changing. The currency on the green list looks risky at the time of writing this book. However, keep in mind that everything can change the day you read this. Judging from my observations, the formation of a portfolio depends on a person's age. Is it strange? Not at all. The younger you are, the riskier your investment portfolio can be. We do not mind being on thin ice when we are young, but the older we get, the less we can take risks. What else influences your investment portfolio besides age? The size of your capital. If you have a lot of capital to invest, it's easy to calmly risk a small sum of money. But the more money you have, the more stable your strategy should be. The last factor that influences the formation of your portfolio is the size of your financial cushion. If it is small, then it is better to reduce risks. At the same time, try it as it may sound, I want to recall one more basic investing adage: buy low, sell high. When the coin price tumbles, it is often the best time to buy it. But at this very moment, we start to feel greedy, thinking the price of a coin may drop even lower. This problem is solved by applying a moving average strategy. It can be simple or exponential. Let's look at this example of simple moving average. For example, you are very interested in a coin that costs $100. One fine morning, while drinking your coffee, you decide to buy 14 such coins. So you spend $1,400. In a couple of weeks, the coin price reaches $105. You sell these 14 coins for $105, getting $1,470. You have earned $70 in profit. But what if you decide to buy these 14 coins, not at once, but one coin a week? It seems the chart has not changed. However, in one case, an average coin price is $100, and in another case, the price is $91. Accordingly, in the second case, you spend $1,274 on 14 coins and sell each of them at the same price as in the previous chart. Your profit is $196. How did that happen? We just chose a different approach to the situation. In applying a simple moving average strategy, you do not need to constantly look for the perfect moment to enter the market or be afraid that the rate will plunge even lower. You just buy a certain amount of currency every month. You keep buying, whether the market falls or grows. In fact, this strategy is very hackneyed, but truly efficient for long-term investment. In general, the simple moving average strategy allows reducing the average price of purchase, buying more shares for the same money, reducing losses in the falls and emerging from losses more quickly on the rise. Now I suggest considering exponential moving average strategy. The exponential moving average strategy allows the increase of your profits. Here everything works this way. When the price stays straight or goes up, make the usual purchase. When the rate goes down, you buy some more. It is worth noting you can also use this method for short-term investment. Here you expect a coin's price to grow in the near future and then sell them. When using this strategy, I recommend paying attention to altcoins, especially those in the formation stage. It is very important to take profit in the short-term strategy. For this, I recommend using the 50-50th strategy. Suppose you buy a coin for $1.50. Later, its price reaches $3 and you sell 50% of a coin and break even. Everything is simple. Let me give you a few tips. If you are a fan of stability over risk, then give preference to coins that initially cost more. And if you dream of potentially explosive profits, then pay attention to cheap coins. The biggest profit is made on cents. After all, no one will argue that $1 will grow tenfold much faster than $100. Finally, remember that the cryptocurrency market is constantly changing. Therefore, you need to monitor your investments hourly to stay up to date and make wise decisions. Thank you for watching Financial Literacy TV. Hit the subscribe button to stay in touch.